go, homie. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne McDonald. I'm a currency trader, and I don't like Microsoft or Microsoft Windows. I guess I need a Linux machine. Can we run MetaTrader on Linux? Let me know. Leave a message in a comment below. So anyways, hey, I'm a currency trader, so we are going to do some currency trading. Welcome to Forex.Today, the YouTube community and Twitch community and Facebook community of more than 17,000 foreign exchange traders stationed around the world watching the clock 24 hours a day. And we are here to collaborate, sharing trading ideas, thoughts, analysis, technical, fundamental, psychological, emotional, all that kind of stuff. So thank you for being here. Thank you for taking notes. Thank you for leaving questions. Thank you for asking questions. Thank you for your participation, your good karma. I think that our community is a good thing, and I think it makes the world a slightly better place. And hopefully you're learning a few things along the way about trading with discipline, with independent thinking, with patience, with discipline, looking for conservative, repeatable patterns. At least that's what I preach. And I preach to teach, because some of you never had this. So today we'll cover what? Gold, oil, Bitcoin, euro, yen, dollar, that kind of stuff. And if you want a particular thing for me to cover, I'm happy to do it. Just ask. And since I tend to look at the chat, answer a question, but the answering part takes me 10 minutes, and then I look back and I look at the chat again, there's been 10 minutes that I haven't looked at the chat. So if I didn't get your question answered, I apologize. But I've been doing these webinars pretty much every day for 15 years on YouTube alone. So if I don't get to your question today, subscribe, and I'll see you on Monday. Cool. If you need a broker, tradersway.com is who I recommend. The link is in the description below. If you need a book on trading Forex, I wrote a book 10 or 12 years ago. It's still aight.
China Central Bank just reiterating their ongoing stance. They're going to accelerate.
The link is in the description below. If you need further education, further training, visit fxbootcamp.com for training videos and live trading groups. There's lots of resources in the description below. So anyways, there's a link below the video. So check it out if you need more help. Otherwise, let's get on with our good day. But once again, these daily webinars don't cost you money, but they do come with a cost. And that is you need to visit tradersway.com today, open up a demo account. And then hopefully they can earn your loyalty and your respect. And when you're willing and ready and able to open up a live trading account, you would do so with Traders Way. Maybe go with an ECN account. Was there audio here? No audio here either. Oh, here there's audio. Okay. Okay, and now it works. Now we got it. Hang on, guys. I know. I know. See, these are different scenes. So this will have a different microphone than this microphone. So, anyways, for some reason it wasn't working. Now it should be working. Yeah. All right. Cool. All right. Nice. Where are we? I guess this is where we left off last night in the swing trading group. One of the things we were working on, is our trade plans. You're like, really? Newsflash. Okay, so one of the things we're working on with this, with Goldilocks, is that I'm a bull. And here we're combining monthly and weekly pivot points, and next week and next month's pivot points. So I should be clear. We're looking at this in the terms of February, which is next month, and then next week. And from all of that, we concluded if you were a bull, you're looking for the combination of the monthly and the combined with the weekly. And then I drew this this little thing here, and the idea was up. Okay, and that we would probably be challenged right around where we are now. So that was, what, 12 hours ago? More than 12 hours ago, and we were here, and now it's there. Very nice. One of the things that's changed, of course, is the entry for next week has moved up. But we weren't interested, we didn't know that at that time. We only knew what we knew, and that's what this gray area is here. Okay? So since then, it's up quite a bit. You were probably long in 1840-ish, and now we're at 1870-ish. All right, $30. I was thinking about moving my, no, it's not there. No, I uploaded it, and then I have to do a tweak. Sorry about that. I mean, you know what? I could probably do this now. Let me just do this now. Also, I want to ask you a question, or at least get some feedback. I'm thinking about moving the webinar, daily webinar, to 9 a.m. My children are going to go back to school full-time every day, and I thought, you know what, I should drive them to school now that I have a vehicle. So I thought maybe I can drive my kids to school every day, and we can do a 9 a.m. webinar instead of an 8 a.m. webinar. Thoughts, feedback? Meanwhile, I'll go to Vimeo. Videos. Wait, this is it. Okay, more actions. All right, there we go. So it's the War Room video is on the site now. See, you ask, you get. Of course, Stevie. You just seen them, the kids that are like, yeah, it's nice, and my son pulls out his phone. He's like, can I play music? And I'm like, yeah, get ready for it. So he puts on a song, and his eyes just light up because it's got an upgraded sound system with a 12-inch subwoofer in the back. It's ridiculous. So anyways, he's like, holy shit. So, cool. All right, thank you, Madam. All right. So yeah, we'll go in the GTS. All right. La 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 la. So that's it. Anyways, Goldilocks. So when we meet, for those that are not in the group, when we meet, I don't talk. I mean, we talk about specific trades, obviously, but my key focus is to remind you what you said you wanted to do. Because remember, the most important thing as a professional trader is you actually tell people what you're going to do. Imagine, and I don't have a copy here, but like my disclosure document for my last fund, I can't remember, what is it, 40 pages, 50 pages of disclosure. And you have to, in great detail, be extremely clear about what you're going to do with your client's money. So this idea, like, I don't know what I'm going to do, every day I make it up, it just doesn't even exist in the industry. All right, so I always have to remind people, like, what is it that you are offering? What is your value creation? What did you say you were going to do, right? And so yesterday we're just isolating gold. And I'm like, well, you know, these areas are important on the monthly. These areas are important for the weekly. And this is where we are at the moment. And that would be a decent entry if you're trying to front run next week. Done. Okay. But you have to also understand. So Layla says, so gold is gaining value. I actually said, I don't even care about this part of the equation. I'm not saying gold's going to go up. What I'm saying, what I'm declaring in the trade is that I think the dollar's going to go down. That's all. And so therefore I do what I do. And if it comes up here, which I expect, and then if it comes, and I expect it to be rejected, and then it comes down here, well, I'll get knocked out of the trade at break even, but the point is I'm still doing what I declared I was going to do, short the dollar. And if the timing is off due to something like maybe seasonality, like it's the right trade but at the wrong time of year, or too early, like not at the beginning of February, but maybe at the beginning of March, maybe is a better time, right? So, and therefore I get knocked out, but I'm still doing the job. Okay? It's like one of these things, like as a professional athlete, sometimes you have to pass the ball or the puck or whatever, right? But other times when you have a clear shot, it doesn't matter really. You need to just take the shot. Oh, well, Jimmy is 5 feet closer. Take the shot. You're open. I mean, take the shot. So in one of these situations, it's like, it's just a shot. You don't know if it's going to do this. In fact, you doubt it's going to do that. In fact, it'll probably do that. Okay, great. Well, that's why they invented stop losses. Take the shot, jam the stop. Okay? So there's one, a good one. We had a cluster of weekly and monthly. Take the shot. It might work out, it might not, doesn't matter. And to get to that point, you have to have, number one, small lot sizes relative to your account size, which means low leverage. So a loss doesn't hurt, or a break even is no big deal. Right? And the other thing is winning percentage. You're not clinging on to winning percentage. See, being concerned about what percentage of trades are winners is probably the worst thing you could possibly do to your trading career. Because you're like, I can't take a shot there because it might, and then you don't take the shot because you're so worried about your winning percentage. Well, what if it breaks even? What if I lose? It'll ruin my trading, right? My percentage. And so what it does is it forces you to take little tiny winners so you can record it as a winner. And then instead of taking a loss, you're like, oh my God, that's going to draw down my winning percentage. So then it trains you to not take a loss. And it trains you to take tiny little winners. And you know that is a guaranteed recipe for failure. Because now you have little winners and big losses. And you're like, oh, but my winning percentage. Right? So in this case, I'm saying the opposite. Have as little leverage as possible. Have very small lot sizes. If you have a clear shot at the net, take the shot. And if it doesn't go in, it's okay. Put the puck on the goalie a few times, right? Take some shots on net. You might get lucky. It might go in. You're not going to score if you don't shoot. Okay? In this case, it's not just random. You're not shooting at any net available, right? there's some skill and some strategy, and you understand what the other players are doing. You understand the strategy of the game and all that kind of stuff. So I'm not saying throw that out. I'm not saying be reckless and crazy. But if you got the plan and you're at support and it's making a higher low, take the shot, bro. And you're like, well, what about seasonality? Well, take the shot, jam the stop, and it's okay if you break even. It's okay. You had an opportunity. Think about that. If you had 1,000 opportunities a year, some of those are going to score. In fact, many of them are going to score. But, like, I'm thinking there's all these analogies, and I think I opened up with an analogy in the day trading course, but let's move to a different one. It's sort of like, you know, how many shots did Michael Jordan miss? How many shots did Wayne Gretzky miss? Okay, most. Okay, cool. So we'll move on with that. That's interesting. So once again, I would, on this asset, I would be short this, which means I'd be long Bitcoin. Well, how do you put together a trade plan on Bitcoin? Well, that's what this is. And the first thing you're going to say is, well, Wayne, that's bearish. Okay, well, that setup is bearish, but you know I'm a bull, right? So I was doing something here to explain it, but check this out. If I'm a bull, let's just, I'll just update the same indicator. Okay, it's a day trade, so I'm day trading Bitcoin. I'm not a bear, I'm a bull, so let's move this here. Okay, you ready? I'm a bull, and therefore, when right? There's the drop, Asia fade into London open, gone. Okay. Do I have tips on how to make a scalping strategy better? Yes, master the 4-hour chart. I'm telling you, you'll do significantly better if you know where we're going before you start scalping. Okay? So anyways, this is day trading, guys. Okay? Asia fade, London open, done for the day. So Monday's trade plan would look like this. Okay? Okay? And here's the thing. You might have the opportunity today. Okay? We call that a front run. You might have an opportunity today. December personal income down. Up. Spending down. Okay. PCE month over month, year over year 1.3. Core 1.5. All right. All right. Canadian GDP negative 2.8 year over year. Hey, it could be worse. Could be worse. Canadian industrial production 1.5 month over month. Raw material up significantly. All right. Commodity prices are up, huh? Davey says, sorry I flooded you with all the questions. No reason to apologize. It's exactly why I'm here. I'm honored. Russell says, so we're back to the dollar down. No, I didn't say that. What I said is I'm a dollar bear for fundamental reasons. Doesn't mean dollar's going to fall. You have to separate the two. I'm not looking at the chart saying, oh my God, that looks bearish for the dollar. I guess I'll sell it. No. My job is to say, do I have a shot? Okay? So let's clear this out. A drop like this that stabilizes gives me an opportunity to sell dollar. Higher high, higher low, sell the dollar, and up. Okay? That's all it is. We went from a low to a big up to a higher low to a higher high, higher low. So consider this like a 1, 2, 3. One support to the higher high relative to this one, right? Relative to this. Therefore, you got the higher low off the fib area. So, yeah. So, this is the 3. Okay? Does it mean we're going to be up here? No, I have no idea. So, what I'm saying is, yeah, I'm a dollar, so I'm a dollar bear, so the only thing I can do on this is buy gold. But I still only buy gold at support when it shows me signs of a reversing back up. Yep. So, that's that. Okay. Whoa. So yeah. This is much more fundamental, obviously. So we'll see what's going on here. Much harder. But if I'm a dollar bear, then you should also know I'm oil bull because it's priced in dollars. So if prices are going up, either the demand or the supply or whatever, so the currency is weaker, which means you need more. So that's one way of pushing oil up. But also the reason dollar is weak would be for global macro reasons, and those same global macro reasons would increase the value of oil. So it's, once again, puts me in a one direction mode. You can look at this and say, well, based on this time frame, it's pretty mediocre. Okay? On the daily, it's mediocre. Okay? But remember, I'm not really day trading this. I look for day trading after. But I'm looking at higher time frames first, right? So I'll say oil's supposed to drop down to 50 and then it'll go up. Okay, somewhere between 51 and 50. So what I'd like to see, if it was perfect textbook, would be a rotation this way. Okay, and now that's a bit of a challenge because of the lower low. So if this ends up being a bottom and we go up here because of a front run, this gets lifted up and elevated. So I want to play that, and that's why you trap these in ranges. Okay? And you buy the bottom of the range if you're a bull. You don't like doing it, but that's what a range is. And that's where, by the way, you use oscillators. New Trader says, well, what about February? Any fundamental change in the February plan? There couldn't be a fundamental plan that changes on a monthly basis. My fundamental analysis tends to last years, not weeks. Okay? The issue with the dollar moves is not fundamental, it's seasonal. Okay? It's right, as a farmer, it's like saying, it's not that you didn't plant the corn right, it's that nobody wants to buy corn, right? So there's some sort of jade, right? So actually, that's a terrible example. So we'll just scratch that from the record. So you just, fundamentals last years, not weeks. We'll go back to that. That was good. Okay. Okay. So once again, new trader, imagine you wrote a 50-page document disclosing the risks. But also part of disclosing risk is explaining what you will do, as well as what you won't do. So imagine you'd have to write a document that says to a client, I'd like you to invest, and the strategy for this fund over the next 3 to 5 years is to buy the dollar. You want to buy the dollar. So if someone invested in you and you told them you were buying the dollar and then you go ahead and proceed to sell the dollar, they're going to wonder why. And of course, if you lose a bunch of money, they'll say, you lost a bunch of money doing the stuff that I didn't agree with, so now you owe me the money, I'm going to sue you. So you couldn't write a document that has to be updated every month because you're like, well, this month we think we're going to buy a dollar, next month we think we're going to sell a dollar. Right? No. People have to know where you fit in their portfolio. Think about a hedge fund. What is a hedge fund doing? Hedging their positions? No, you're hedging your client's exposure to other portfolio risk or direct currency risk. There's a reason why someone invests in you most of the time. Okay? Anyways. All right, so all that's crystal clear. Let's look at the indices and see what else is going on. What's going on? Yen way down, dollar finding its weakness. Euro recovery, pound recovery. Aussie was very weak, but now has been coming up for the last day or two. So recovery here. Kiwi recovery. And even CAD is turning the corner today. A little bit of a laggard. This looks like risk on. Whale oil B. So how risk on is it? So in this risk on mode, I would expect euro dollar to go up. Okay. But another play on this risk on mode is my exotics positions. And and we know right now I'm short euro. And I talked about that 3 weeks ago when we did the trade, where I'm doing it on purpose to show that it's a mixed bag trade. Right? You get that? Where I borrowed a bunch of euro and then lent the euro to South Africa, knowing that if I get the play correct on the South Africa side, it's actually a bit of a mistake on the euro side, because if the rand goes up, I expect the euro to go up too. And that the better play, now that the fundamentals have changed, because we used to short euro rand a lot before the fundamental change on the dollar. So then I was trying to get people to focus more on the dollar rand than the euro rand. And so last week and even yesterday, I think yesterday and last week, I had set up dollar rand plays to say fundamentally that makes more sense now than what our other, let's say a year ago, we would rather short euro rand because we collected negative yield on euro, which means we were paid to borrow the euro. And then we lent that to South Africa, so we got paid for that. So we were double dipping and getting double payments and earning a higher yield. But that's so last year. So I've been explaining that now it's a mixed bag, and I don't actually expect Euro Rand to generally go anywhere, and that the USD Rand would be the better setup because I expect the US dollar to weaken and the Rand to appreciate. Okay, you get those nuances? And so we can go to the exotics play now, and here's this trade. This is the mediocre one, Euro Rand. Okay? 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 When do we check the indices? All the time, LIBOR. I have my charts open all the time. Right? All the time. It drives my wife nuts because she goes around the house turning all the lights off. I'm like, stop turning the lights off. Oh, I have to turn the lights off. Like, what do you care? It's a light bulb. Right? And that opens up a can of worms. So anyways, so when it comes to my office, what I did is I put biometric locks on the door. So she can walk around the house, turn all the lights off, but she can't get into my office to turn my screens off. So, and you think I'm joking, right? No, I'm not joking. Biometric. So anyways, so yeah, so I always have my charts open. I'm always looking at the indices. Yeah, I'm always looking at the charts. I'm always, right, and if I'm not at my desk, I got my phone in my hand. Okay. Alejandro says, why don't you trade USD Swiss franc? Well, they're both funding currencies. Okay. Cool. So this is the rollover. I think we described it last week or maybe Monday as an old man easing into a hot bath. You guys remember all that? We set this up, this double top at a 618, which we had predicted in the future. I think we had two trade plans on this. I think it was like plan A and plan B. Okay. This is the rollover. Okay. Alejandro's like, thank you. Well, think of it this way. When things go bad and people say, give me my money back, whatever that is, whatever investment opportunities they have all around the world, they're going to take the money and put it back in their bank account, right? So they were investing into stocks or bonds or real estate or something around the world. So think of it globally. And when people say, oh my God, things are bad, I need to get out of this investment. Well, they sell that investment, right? Now they have the cash and they put the cash in their bank account. So the question is, where is the bank account? The United States of America, Switzerland, and Japan. Okay. Hello, Wayne. I downloaded your chart indicators. Do you have a video? Yes, it's on the side of the thing that says click here to watch video on how to install the indicators. There's also an auto installer as well. But yeah, it's on the left-hand side. How to install. Okay. So I don't have the page open now, but when you go here, like here's the site. And it has all the indicators, right? There's a thing here, there's a thing here, there's a thing here, right? It's got all these indicators. So it kind of looks like this, right? Okay. Over here on the menu, one of these says how to install. And up here it says auto installer. Okay. So yeah, it tells you how to do it manually, and it also does it for you. So anyways, that's rocking and rolling. But like I explained more recently, and look at that, that's gorgeous. This was yesterday, I think I did this for you guys. This is the better trade long term. And you might recall like this being a major catalyst. Okay, that's the February sell. So look, okay, like I can't force feed you, nor do I want to force feed you, because I want you to be an independent thinker. You have to do your analysis, you have to do your work, you have to be at your charts, you have to pull the trigger, you have to manage the risk, you have to make decisions. I keep preaching consistency, fundamentals, conservative, repeatable patterns based on your fundamental bias. Okay? So it's one of these things where if you want to sell USD Rand for either a USD reason or a Rand reason, you knew it yesterday, you knew it last week, you knew it at the beginning of the month. And you know how to day trade, you know how to swing trade, you know how to position trade. So it comes down to whether you do it or not. And I think very often people are doing so many different things that they're looking left, they're looking right, and they don't see what's in front of them. Or you're so focused on your indicators, okay? So when I worked at NASA back in the 90s, okay, I worked in the I was an aviation research assistant, and what I focused on was flying simulators and virtual reality, studying heads-up displays. So I was a guinea pig, I was a rat with goggles on. I was doing virtual reality before you even heard of virtual reality. And the reason for it, like the history of the heads-up display, was at the beginning of the Vietnam War, pilots had forgotten how to dogfight. So they would show up, the American pilots would show up, and we would lose one airplane for every 2 MiGs. And you're like, hey, that's pretty good, right? Kill a couple of MiGs and then you lose one of your boys?
Chief of Staff saying delivers a 20.3 million COVID vaccine doses. Germany expected by the end of March.
And so they realized that they needed to make some changes. What the reason for it is, I think the first air-to-air missiles were being used, and the missiles were really good, but then the pilots got so reliant on the missiles doing everything, you know, the heat-seeking missiles. I don't think there were Sidewinders yet, but the precursor to the Sidewinder. And anyways, they got so reliant on that they were not very good pilots. They weren't trained to be very good pilots. The missiles were supposed to do everything. So things like Top Gun School was created to teach people how to dogfight. But they also said, well, the pilots are doing so much, and like they're flying the plane, they're flying against the MiG, and now they have to do the weapon system. There's so much going on. So not only will we'll teach them to be better pilots and actually fly in a dogfight and have strategies and tactics for that, but we'll also make it easier because they're looking down all the time, looking at their gauges, because now these planes are fast. And you got to remember, they were taught how to fly by World War II pilots, right? But now we have got jets, and they're going so much faster, and now the surface air-to-air missiles are going on, and all the instruments were down, but you're going twice as fast. You're like, oh my God, and you have to fly against this MiG, looking down, and setting up your weapons, and what about all your indicators? Like, you just, wow, it's too much. So during the Vietnam era, they moved some of the instruments up so that you could see it through the glass. So now you can fly and have some of the data up so you don't have to look down, right? That was really good. So after Top Gun, the kill ratio went like 6-1. And the heads-up display was really good, except now they would fly, shoot down a bunch of MiGs, and when it was all over, when they ran out of fuel or weapons, they'd come back to base or back to the carrier. And as they're taxiing, they're taxiing like down the runway. They're moving 12 miles an hour. And what would they do? They would hit a parked plane. Oh, because they were looking at the indicators, but they didn't see the airplane in front of them. They were staring at the heads-up display. It was so funny because now all you see is what the indicators that you're looking at, and you don't see the reality. You're like, dude, there's a parked plane. There's a parked plane. There's a parked plane. Ah, dude, you hit a parked plane and you're moving 12 miles an hour and it was right in front of your eyes. And and it's a real story, like it really happened. And they're like, what's the psychology of this? You hit a parked plane? You're moving 12 miles an hour? You didn't see it? It's right there, right? Oh, well, I was staring at my airspeed indicator, or in this case, a ground speed indicator or whatever, right? Like they were doing other things. So there's a parked plane right here, and you might get so caught up in your oscillator or this or that or something, and you miss it. I don't know why you're missing it. And I keep trying to like simplify things for you, like simplify, right? And in this case, what I preach is you're a bear on this or you're not a bear on this. Like you can't swing both ways like a broken gate. So it gets very, 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 very simple. If you're only a bear on this, well, how do you do a weekly swing trade? Well, this is the M3. That's where you sell. That's it. Done. Stop goes up here. You're done for the entire week. You're done. Well, what about, no. That's it. You're a bear. You sell that. That's it. It's over. It's done. That's the weekly trade plan. What about next month? Oh, there's the M3. So on a monthly basis, you sell there. You're done. Okay. This was Monday's trade. This is February's trade. This is Monday. This is Feb. Okay, you're done. Remember, through the process of simplification, your trading fundamental bias, you only have very few rules of engagement. You're not confusing it about, well, what if I did this, and what if I did that, and what if this other thing happened, and oh my gosh, right? You sell that, and you're done. Okay? You sell it and you're done. You're done now. You're done. You might actually be done for the month of February. At least on your position trade, you're done. How many days do I, like what's a front run on a monthly setup? Typically the last week, because most of the time, not all of the time, but much of the time, you've already hit your target. So you're on your new target. So like January, you could argue might have already been done. It's not really, like January's not like that kind of month, but very often in a typical month, let's say, in a trending month, by the third or fourth week, you've already hit the target. So you're done, and there's some sort of retracement based on profit taking. And now you start thinking the next month. So how many times this week do you recall that I said, I'm already on February? This is all about next month. In fact, I'm even thinking about March. I'm on March and February, like January. That's so old and so dead. You're like, dude, we're still in January. Yeah, but I don't trade January at the end of January. Right? Like, I'm not interested in January. I've already made those trades. So what's the next trade? And this goes back to the conversation I think we had on Wednesday, where I said, someone asked the question like, what do you mean you don't trade today? Well, I planned today yesterday, so that's the trade. And yesterday I might have traded today yesterday because I would have done the front run. Or I did the planning yesterday, so I'm not doing planning for today because I did that yesterday. So if I get the opportunity today, it's because of the work I did yesterday. So what kind of work am I doing now? Well, I'm planning tomorrow. You see, like, you don't show up and like, what am I going to do today? That it's all preset and defined through fundamentals. That's why you have to have discipline to carry it out. I'm not saying you don't have discipline. I'm trying to focus on the simplification where, once again, I think, and I'm as guilty of this as anybody else, we can complicate things more than it really is complicated. Okay? It's your mommy's fault. It's your kindergarten teacher's fault. Oh, Alex, look at him. He's so smart. He figured it out. And you're like, oh, I feel so good when she says that. And now we go through life trying to like show people how smart we are because it feels good. But you're like, smart? No, we want simple. We don't want smart. We're not trying to outsmart the market. Okay? Right? We're not trying to outsmart the market. Okay? We've known for a very long time what's going on here. And the thing is, are you carrying this out? Okay? Okay? That's what I hope the future looks like. What's up, Elu? Okay. That's what I think the future is going to look like. I'm not looking at specific prices, just I'm looking at the down, the up, the down, the up, the down, the up. Okay. Now you can try to use, okay, here's the counter trend. Okay, here's the sell. Here's the sell. Here's the sell. Okay, so we're kind of just looking like counter trend, sell, sell, sell. And I'm trying to throw in monthly on top of weekly. We know bulls are going to buy down here. But since you have a fundamental bias, you're probably going to think, well, we'll take over the week after. Okay? Do you guys see that bulls are going to buy here? You see that, right? As far as I'm concerned, it's factual. Of course, a bull would buy that. It's right there. Obvious. So you can expect that. So it'll lead to like up and down, or it could lead to a range trade where it goes up and then down. I'm okay with that. So you always have to, even if you're a bear, you have to think like a bull. If you can think like a bull, even though you're a bear, you understand what the bulls are going to do before they even do it. Therefore, you can adjust your risk. One of the questions we handled yesterday in the swing trading group is like, how do you know when to take profit on your weekly trades and your daily trades and all that kind of stuff when you're trading inside of a position trade? Like, how do you know these things? Well, if you know bulls are going to buy it here and take it up to, A or B, you make that decision. Should you exit here and then wait for the new move, or do you sell and hold? Yeah, make a decision. Okay? Once again, understanding seasonality helps with that decision-making process. Do you think it's going to go up for the next 16 weeks or 16 days? Are we at the very top or are we at the very bottom? I mean, these things matter, right? Are we in the middle of the move? And you're like, well, how do you know all that? Well, that's what technical analysis is. Okay? That's why you're analyzing. Okay, let's look at some dollars over here. Kiwi, 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 can't you see? Okay. This is next week's buy zone. Okay. It's not a pretty trade. I was wanting this. I don't like being down here, but look, we'll call that a double bottom. So that's an S, so we go to R. Okay. Oh, both reasons, Cal. Cal says, why do bulls buy there? Good. Let's go back. What were we on? What were we on? Let's go back to that. It was a yen, wasn't it? No. No. It was a... I don't remember where we were. Oh, exotics. Hang on. La 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 la. No, I don't remember where we were. Sorry. Yeah, bears would exit, bulls would buy. It's simple as that. Sorry, maybe I was on one of these. No. I think I pulled it. I don't remember where we were. Sorry, guys. That was so like 2 minutes ago. No, the one before that. Okay. All right. So anyways, we're Oscar Mike. Very cool. What's going on? Nothing's right, I'm told. Very nice. We have so much to be thankful for. We did exotics. We did some yens. We did some dollars. Okay. This is interesting only because you can see we had it range trading for a while. So let's go back in time and see if that little gray area was important that I drew up for you back then. Okay. So clearly I drew this as a floor when we were here. Or actually I would have drawn it when we were here. Right? Actually, let's do that because I wouldn't have drawn it that way. So we would have looked at the double top. I would have looked left. I would have said that's supportish, right? So anyways, we got this. Look, even another week or something goes by and even this hits. Okay? Pretty amazing. These are all day trades. So you can't catch them all. This is Friday. This is Thursday. You can catch that. This is Wednesday. This is Tuesday. This is Monday. Okay. Catchable. Not easy. I mean, the velocity on some of these are hard to catch. That's day trading for you. Look at the moving averages, how helpful they were. One thing you could do here is check your indicator list and say, man, these day trades are difficult. Well, maybe you should be swing trading. And then you see, oh my God, that's a perfect swing trade. Done. Done. You see that? Done. What did you do this week? I bought pound yen in the swing zone. Done. Okay. Someone asked me today how to improve on scalping. I said master the 4 hour. So another way of looking at that is become a master swing trader. I'm telling you, swing trading is the pinnacle. It should be the backbone of your trading career. You can scalp and day trade inside of that. That's really cool. But like, if you only have an hour a day, even an hour a week, to be a trader because you got kids and a spouse or a couple of spouses. If you have a job, you have elderly people to take care of, the world is on your shoulders. There's just so much, right? You have very limited time. Learn how to swing trade. You still have a day job? Learn how to swing trade. You can day trade once you're able to quit your stupid job that you trade your hours for money, right? Imagine you trade your hours for money, not value, but hours. Terrible. So, if you had to start somewhere, start as a swing trader. Theta says, would average daily range help with pivot points, or are they both the same? They're kind of, I mean, it's incorporating what happened yesterday, which, I mean, think about this. What's the average daily range? The high plus the low divided by the periods. What are pivot points? High plus low plus close divided by 3. So, the average range, high and low, is range. So, it would incorporate. So, when you're doing things like, what is the mean? And then what's the standard deviation above and below the mean? It's going to be incorporating range because that's what standard deviation is. What's the average? What's the high? What's the low? Right? They're just deviations from the average. So yes, average daily range is baked into the math, but it tells you so much more because ADR doesn't tell you the trend. Pivot points show you the trend. Okay? Okay? So think about it this way. Here's the average, okay? The weighted average, okay? These are weighted averages, not average, weighted average. So the average is incorporating sentiment, which is way better than the median price. We want the weighted mean price. Okay? So it incorporates sentiment into the math. And now, I've filtered out the bearish point of view because I'm only a bull. I can only buy this. And now we're looking at things like profit target conservative, profit target aggressive. So how do we get to these numbers? Well, essentially, it's looking at a few things, but one of the things you could interpret it as looking at is at ADR. Okay? But it's not an average. It's based on the previous period. But it's essentially the same. Based on what happened yesterday, here's what today will be like. Yesterday was cold and sunny. Today is going to be cold and sunny. It might be a little warmer. It might be a little cooler. It might be a little cloudier. It might be a little sunnier. Okay? Cool. Oh, sloping pivots? Yeah, I got you, dog. We can do it like this. We'll do a standard, simple, and then I go insert, and I go to, there we go. Those are pivot points. Or I guess maybe it looks better this way. Let's do it this way. What should I do here? Pivot points monthly. Let's do that. Okay. Pivot points monthly. Insert indicators, custom price action pivot points. So it's using price, not market. And now we have price action inside of monthly markets. So let me show you how complicated this gets. We're on the last trading day of the month. You already know you're a bull, and you already know that this is your buy zone. So the only thing I don't know is if you bought it or not. Okay? If you bought this. Or if you're going to buy this. Okay? Okay? You only had to make one decision. Are you a bull? Why no XRP? I think it was banned from many exchanges. Got pulled by liquidity partners. It wouldn't be Traders Way making the decision. Their liquidity partners would have called them and said, no, no more. Okay? Same thing with Turkish lira. Like, the liquidity partners are like, no, we're not interested. Because remember, a broker does this. You have a broker, right? And then the broker is connected to liquidity partners. So you got all these LPs. And then you got traders. Okay? And you got to understand, like, someone comes in and says, I want to trade pound Aussie. They got to go find someone that also wants to do that. And so they take your trade and they say, do you got it? Do you have any? Do you have any? Do you have anyone that you're, right? You want to sell, so they got to say, does anyone want to buy this crap? We have a seller. Does anyone want to buy this crap? And they try to fill it. But if you're trading XRP and they're like, we don't do XRP anymore. And then these guys said, no, we're not interested in doing those trades anymore. There's just too much headache because of the blow up, right? I mean, dude, it spiked 300% and then dropped 90%. Like, people are just not interested in that, right? So at some point, they're just like, if they don't do it and they don't do it, but this one might do it, but then you find your cost is like ridiculous as a broker, you're just like, you know what? This is just too complicated. Just piss off. And they kill it. But it's not their decision per se. There's just no one else wants to trade it. You want to trade it, but no one else wants to trade it. Well, so what is the LPs? The interbank? Well, what's the interbank? Right? You think there's a store somewhere in Basel? And they're like, where are the interbank? What is the interbank? There's no exchange. It's a way of describing a globe of liquidity partners. Okay? So like GameStop, so if you want to do GameStop, you have one day where GameStop jumps 1,000%, or a week where it jumps 1,000%. And you're a broker, and then all of a sudden, so we'll have to do this, broker. But this now goes through an exchange and goes through a clearinghouse, and the clearinghouse says, well, this is ridiculous. Like, the amount of risk, because remember, it's what, T+3 to clear, isn't it? So now they're like, dude, well, what if this drops 90% before it even clears? Because it's up 1,000% in a week. By the time 4 days goes by, it could be down. And like, so the clearing partner says, okay, we're going to increase your margin as a broker now. Margin requirements have gone up 300% to cover the potential risk of all this. So now the broker's like, oh, crap. Right? So now they, like, literally, Robinhood had to come up with like hundreds of millions of dollars. So imagine now the clearinghouse comes back to these guys and said, based on what's happening, we're going to need you to deposit $357 million right now. And Robinhood's like, dumbass, what? Because they're just executing trades on behalf of the clients. But now they're like, you got to come up with $357 million to guarantee they can be cleared over this time period. And they're like, holy crap, what? Well, they raised $1 billion, but just in case this keeps going, you have to understand it's not like they were asked for $1 billion, so they raised $1 billion, and then the next day another $1 billion. Like, dude, they have to so they raised more than they needed, right? But it would be something like that. So put this in kind of perspective. Let's say you're a Forex trader in the United States, and you're licensed and registered with the NFA as a CTA who is a Forex specialist, because for some reason you have to pay extra money to be a Forex trader. Even though you're licensed and registered as a CTA, they're like, oh, but you got to pay more money and fill out more forms and have more regulations because you're a Forex trader. But if you traded Forex futures, we wouldn't have a problem. You're like, well, that's dumb. But anyways, so now you do all of that, and you paid all this money and taken all the tests, and you have the fees, and you've paid the membership and all this. Great. Then they say, okay, well, before you can even accept a client, you're going to have to put into this bank account $30,000 in cash. And it's there to protect the clients. And you're like, how does that protect the clients? So they're like, don't ask questions. So just to start, you have to have $30,000 in cash. Imagine, right? That's like like Robinhood or whatever. You have to have some sort of liquidity requirement, right? We call that your net capital requirement. So imagine now you're trading, okay? You're trading and everything's going good. And then one day they said, you know what? The NFA says all CTAs that trade Forex, because of the volatility in Forex, we're going to move this from $30,000 to $300,000. So please deposit $300,000 in cash right now. Would that impact your business? Undoubtedly. So now imagine, because of what's happening with the short selling stuff, the clearinghouse now, which is a different scenario, but imagine it's like the NFA, right? Imagine just one day they showed up and they're like, you need to deposit $357 million right now. And you're like, holy snickerschnocker, right? And so one of the things they do is like, so what if, right, they just shut that down because now they don't have to have that much money or whatever, and then they scramble, right? And so, why can't you trade XRP? I don't know, right? But it could be like there's no liquidity partner because nobody wants the other side of your trade. You might be the dumbest person in the world. I'm not saying you are. I'm not saying anyone trading XRP. Whoa. Everybody settle down, right? But I'm making a point where if no one wants to take the other side of the trade, then you can't trade it. You're like, but I want to do this. Well, you're the only one. Or there's been a requirement to the LP where they're like, well, we just don't want to provide the liquidity. There are people out there, but we don't want to be involved because now our requirements are high or our risk is high. Like, how do we hedge this now? If they can't find an offset to the risk. Remember, they don't want the risk. So ultimately they just say, you know what? We're out. We're not playing this game. And if all the liquidity partners or most of them do it, then that leaves the risk to the broker. And the broker's like, well, we could be bookie and take the other side, but then how do we hedge that risk? And eventually they're just like, forget it. We're not interested, right? Like, we just don't want to do it. There's no upside for the broker. There's no upside for the liquidity partner and whatever. And they just like, yeah, okay, no. But there's a price feed, but no one wants to provide you liquidity for whatever reason. There could be a multitude of reasons. But it's very rarely the broker comes up and says, we don't want to provide that to you. Well, they want to make money. If you want to trade it, they're going to make a commission. But if they can't offset the risk, and if they can't match you, or you get all pissed off because you're like, there's 100 pip spread on this, you're raping me. And they're like, dude, you're the only person that wants to trade this. And the other person wants the other side of that trade is a million miles away from you. This is the market, because even with a liquidity partner, there is no liquidity. You see? So they're like, we don't like getting hammered from our clients that are all pissed off on the spread. That has nothing to do with the broker. So they're like, you know what? We'll just pull the plug. Okay? Now, Pete says it's only in the U.S. I get it. But ultimately, as a broker, you need liquidity partners. Okay? Especially if you actually execute the trades versus booking everyone and trading against your clients. Clearly, Trader's Way doesn't do that, because otherwise they would probably do it, right? Like, they would provide the liquidity, they would just take the opposite, right? But obviously they're not, so they don't, and therefore it's not available. So it's a long-winded question, but I'm trying to show you that there's business decisions behind all of this. Okay? There's business decisions behind all of this. It's not like someone's making arbitrary decisions. This is all logical, right? So anyways. But I can tell you, Pete's probably crushing it, making big money on XRP. Okay? Yeah. Cool. Beautiful trades. Lots beautiful. Like, look at this. The last day of the month, right? Look at these entries. Just gorgeous. What's going on? Oh, global investors, like, thanks for explaining Robinhood, why they pulled the GME. Yeah. Yeah. Yeah, just remember, a broker would like to do it if they can make money. So if they're not doing it, there's a reason. Okay? There's a reason. So imagine your reason now. Let's say you had an opportunity to trade XRP as a CTA registered as a foreign exchange broker, and maybe they threw crypto in currencies. Great. So you're licensed and registered to trade XRP. Let's say you could actually get the other side of the trade, so it's available to you. But the NFA says, okay, you could totally trade it, but we've made some sort of decision. The committee got together. If you trade XRP, you will have to deposit $300,000 in an account that you can't touch. You're not going to earn interest. It's just going to sit there. That will allow you to trade it. And it's the same amount if you're $1 billion Forex trader, or you're, a small fund with $100,000 in client money. So they look at it, it's the same if you're 100 or 100 million, right? And all of a sudden they're like, well, deposit 300,000, feel free to trade. And remember, that's not trading money, that's your reserve. So on top of your fund and on top of your client money, that's an extra thing. So you're like, well, dude, we don't even have that kind of cash to trade. And they're like, well, then you can't trade it. So now you've made a business decision. You're like, I don't have 300,000. So I'm not going to deposit. And then you're done. It made sense, right? Cool. So everything is golden right now. That's why the exotics are taking off, because it's risk on. Stock market's opening in a couple of minutes. It's funny, the SEC is chiming in now. They're monitoring the extreme price volatility, and they will act to protect retail investors when, right? Well, dude, they're doing it on purpose. If a retail trader jumps in and buys GameStop and loses money, well, who cares? You should pay the consequence of being an idiot and losing money. It's your fault. I like Hong Kong. Like Hong Kong's like that. Like you lose money in the stock market, not our problem. Buyer beware. And they're like, it was a fraudulent company. The CEO lied to us and then took all the money and fled to mainland Hong Kong. Well, when you invested money into the company, you should have known that. That's your problem. Okay? You lose money trying to get rich quick. It's your fault. You took the shot. The SEC wants to get involved? Why? People watch the news and go, oh my God, I got to get on GameStop. It dropped 50% in 1 hour. I should get in on that. Well, then you should face the consequence. Right? But anyways. All righty then. All right. Stock market is open in what, 30 seconds?
Trading on the NYSE has commenced.
Saudi Arabia has suspended travel from April to the middle of May. So things are obviously not so good in Saudi. At least it's easy to close the bars. See, I guess what I'm saying where people should take responsibility, like if you're investing your retirement money into a 401k and the 401k invest into mutual funds. The mutual funds declare, again, there's a declaration, a disclosure document, and you somewhat pretty much know what they're going to do. And there's lots of rules on mutual funds. There's just tons. And the rules are there to try to help people make informed decisions and limits mutual funds from acting like hedge funds and that. So it's a highly regulated, very conservative industry. You're allowed to invest into a mutual fund and lose money. Nobody has a problem with that, unless the mutual fund managers have lied to you or broken their disclosure documents, which is extremely rare, obviously. Probably, maybe never even has happened. If you open a Robinhood account and drop 10 grand on a highly volatile stock and lose money, I couldn't care less. I'd say good. It'll get you out of the market. Oh, but I saw on CNN and I just, I want to get rich quick. There you go. That's why it doesn't work. Okay? And by the way, they keep calling it retail. You notice a lot of the players are actually billionaires? I'm like, I think it's overhyped too by the news a bit. Like some of these guys are institutional. Yeah, Anthony, so the CEO is under a lot of scrutiny for that. So what they said is the clearinghouse asked for the, margin, and they didn't have the margin, so they shut down buying, but they continued to allow selling. Now, the argument is they allow selling because to offset people's long positions, if they want to take profit, you have to be able to sell. But also, there's concern by the clients that they're allowing people to short sell but not long. But then again, hedge funds are not using Robinhood. So there's a lot of weak arguments on what's happening. And I think there's a lot of misinformation too. Lots of noise and lots of stuff. So it wouldn't matter if Robinhood allowed short sellers on their platform to sell but not let buyers buy, because it's true, if a bunch of their clients were already long and they're up 300%, it'd be horrible if you couldn't take profit. So they're allowing people to take profit. They're just not allowing people to get back in. And people are now crying like, oh no, but now you're serving the hedge funds that are short sellers. You're in cahoots with the short sellers. But dude, nobody's got a $1 billion in a Robinhood account, right? So that's kind of a weak argument too. But I could see the point of view, but I don't believe that's happening. But I don't know anything. I don't have a Robinhood account. I've never even been to the website, right? So. Yeah, well then people should have done it. So if you short sold it yesterday and you made money, great. And if you lose the money tomorrow, fine. Buyer beware. I really do like the Hong Kong. The other thing about Hong Kong that I like, they're like, oh my God, you invested in the stock market and you made money? Oh, congratulations. And you're like, okay, well, I'm ready to pay my tax. And they're like, oh, no. That was your alpha. You were smart. You took your hard-earned money, and if you earned that from a salary, you already paid taxes. So you took whatever was left over after taxes, and you made a really wise decision. You bought some stock. and you made some money. Congratulations. We're not going to tax you on that. We taxed you when you earned a salary. But why would we tax you again? You were smart. You invested it wisely. That's your money. And then you invest into real estate. You own an apartment, and you're there for 10 years. And then you sell it, and you've doubled your money. You've made, let's say, $1 million on your real estate transaction. And you're like, okay, I'm ready to pay my taxes. And they're like, oh, no. We taxed your salary. So every year that you earn a salary, we're taxing you. So you're paying taxes there. But you took whatever was left over, your excess reserves after taxes, and you bought an apartment, and you've been paying your mortgage, and everything's cool. And you've been doing this for 10 years. We're super happy. You sold it, made $1 million profit. Good for you. Keep the whole $1 million. We would never want to double tax you. We taxed you on your salary. Why would we tax you on your wise investment decisions? And I'm like, oh my God, I love that so much. I love that so much. The Dogecoin. Boom, 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 boom. All right, so the market's open. Everything's fine. So I think we're good. You should have next month all focused out.
The FAA is saying that SpaceX's SN9 Starship flight is being canceled for today.
That was a little loud. The RBA, again, read their past statement and then listen to the new statement. We don't have to guess. We don't have to guess if they're going to change policy. Just read the past statement. If they're going to change policy, they're going to give you hints. And then watch the new statement, and if you're like, oh my God, they're changing, then you make a decision. Okay? Remember, central banks want to do as little as possible. So I'll leave that for your own research. Okay? All right, thank you, everybody. Have a wonderful weekend. I will see you on Monday. Make sure you subscribe and like and leave comments. And remember, there are tons of resources that can help you become a better trader. All the links are in the description below the video. Okay? So have a wonderful weekend. Take care of yourself. Remember, if you're a sucker for the quick, I'm trying to quote Metallica here. If you're a sucker for the quick reward, you will suffer for the quick reward. Something like that. Then it comes to be that the soothing light at the end of your tunnel is just a freight train coming your way. Cheers.